Microphone check, testing 1, 2. Microphone check, testing 1, 2. I probably need to click something on there. Nope, there we go. Mic check, 1, 2. Okay. Good evening, guys. Ken at Tortoise Capital, April 7th, 2022. Before I get into the news and stuff of the day, I wanted to give you a rare peek behind the curtain. It's not every day you're going to see something like this. I thought you might enjoy this. So, working with Angus Fletcher from Ohio State University. And I advised him to write an email to General Hill, who is our commanding general. He's getting ready to change his assignment, and we're getting a new commanding general. And so he's been fully supportive of the work we're doing on creativity, which of course is part of the Fletcher treatment for creativity for traders that we've built. And I said, you should write a letter to him before he leaves so that we can lock in our gains. So this is a letter from Angus Fletcher, who's a full professor. He's the youngest full professor at the Ohio State University, and he's in charge of Project Narrative, which is the world's leading think tank on story science. So he sends a note to General Hill. He says, I am writing at the suggestion of the CGSC faculty. That means me, Command and General Staff College faculty. He says, hey, I'm Angus Fletcher. I'm a professor at Ohio State who authored the articles in the New York Academy of Sciences and Harvard Business Review lately, highlighting the research that he's doing with teams at United States Army Special Operations Command. That's the Army Special Force. This is the organization that is in charge of all Army Special Forces, like all the Green Berets, all the Rangers, Task Force 160, Delta Force. So Fletcher is doing research with all Army Special Ops, teaching the Fletcher method to those leaders for use in the world. He's also working with the Joint Special Ops University. This is the Special Ops University that is all Department of Defense Special Ops. So that's not just Army, that's also guys that are training SEALs, other units, Air Force, parajumpers, anyway, all the special forces in Department of Defense. He's also working with leaders at Special Operations Command. So this is the 4-star headquarters that is the operational field commander of all these special forces that come out of the Army and out of Special Ops. So these are the organizations that train them. And this is the 4-star headquarters that employs them in the world. And Fletcher is doing research and teaching with his method at all of those headquarters and Command and General Staff College. Now, what was interesting, among other things, they're just kind of showing off a little bit here. Whoops, I lost my screen. He mentions, why am I losing my screen here, fellas? There we go. The article in the New York Academy of Science is already their 4th most read article of all time, indicating the impact of the research. And this is research that all started at the Command and General Staff College between Angus and I and our team. So staff from those special ops people have said it would be advisable to brief General Mark Milley, who is the chairman of the Joint Chiefs of Staff, because Milley has recommended the Army develop training to improve leadership in specific areas. And they think that the chairman of the Joint Chiefs of Staff would be eager to learn that the research has been effective, is also being adopted outside the Army and Department of Defense by the world's top MBA programs, as well as Fortune 50 companies, and et cetera. So this is all the Fletcher treatment on creativity that was pioneered for work in the Army with me. That's now going outside to Department of Defense, to MBA programs around the world, Fortune 50 companies, and so forth. And so he's mentioning to General Hill that he'd be honored to brief Milley and to give credit to the Command and General Staff College, which has been from the beginning the engine of that research. And he says he would like CGSC and Army University to be recognized for nurturing that innovative training that is so revolutionary. He says he has access to General Milley's staff through staff at USASOC. However, to ensure credit is given to my college and our training and doctrine command, our higher headquarters, he has been advised it might be good to have our staff connect with General Milley's staff in order that credit is given. Now, the TRADOC 4-star commander, General Funk, has received and commented favorably on the New York Academy of Sciences article and Harvard Business Review article, and has expressed to us for being foundational in that. So if you agree with this assessment, I'd like to liaise with any member of your staff to reach out to the chairman of the Joint Chiefs of Staff to offer a briefing. Thank you for your leadership and your support. It's been an honor to work with the faculty at CGSC. That has already received favorable impact, and we're going to make the briefing to the chairman of the Joint Chiefs of Staff and his staff. That's going to be a go. So in my email to Fletcher, I said, dude, you have a future as a cheese eater of the highest order. I expected nothing less. Your note was perfect, because it was significant, short, focused, scoped. It describes the progress we've already made and hints at the future potential. It gives our general a chance to leverage the opportunity if he takes advantage of it, which he already has. It gives him low risk ways to support, because he's getting ready to leave. So there's no losing that for him, and he can set up his replacement for success. And there's also a hint in there that if we don't seize the moment, then somebody else might get the credit. And it allows us to blame the special ops guys for Fletcher daring to write a letter to one of our generals. And it places Command and General Staff College right at the center of gravity of all this innovation, which allows us to retain control over the scope and shape of the operation. It also begs the question, what the heck are we doing here with creativity in our college? And the general may ask to see the lesson plans, and that will be very innocent, because I've been getting pushback, not from my 2-star general and me and Fletcher. Like, that connection is strong, because he wants to see innovation and has been supporting us. The problem has been all the little monkeys in between us that are scared of their own shadow and only want to do traditional things and not the exciting new adaptive things that Fletcher is proving around the world is massively good. These guys can't get out of their own little turtle shell. They can't get out of their gopher hole and look around and take to seize the opportunity when it's there. So what this email does, by by pushing that up to the 4-star level, and the chairman of the Joint Chiefs of Staff puts these monkeys in a no-win position. They can't overcome that momentum. So they're going to have to support the lesson plans that we have written and controlled and get that into the curriculum to stay, because there's too much positive interest coming down from on high. It puts these guys in an untenable position. They can't even cancel it now because we have irresistible momentum. And the partnership between Fletcher and I, Mr. Outside and Mr. Inside, has given us the successful combination to make things work. And I notice, Van knows just how hard this work has been to overcome some of the nitwits in the way. And this is, I told you I had a plan for this, and so this is how you get it done. And then Angus was kind enough to say, hey, if there was any quality in the email, it came from me. He's lying. He's a pretty smart guy, and he knows how to tell a story. And what I helped him with was understanding the way the power structure works and what kinds of stories would be well suited for success in the culture in which I am proficient. So the combination of the both of us have really made this really powerful. And we've incorporated a lot of junior leaders from the Army, from our college, on the writing team so that they can use that like a power takeoff shaft to provide support to their own research and writing and set them up for success with this momentum. So this is turning out to be a pretty thoughtful and strategic way of transforming the Army from the inside, from the bottoms up. And this is reinforcement for the idea of plan, prepare, execute, and assess. I've been laying the groundwork for this for the last 10 months. Now, I say all this to say that for our traders, what we have, again, is the Creativity 101 course, which is a gentle, excellent introduction to the world of creativity. We have Creativity 201, which is the Fletcher treatment for the Army. Like if you just wanted what the Army gets and that the Fortune 500 guys get. And then if you want Creativity 202, that's the Fletcher treatment for traders. And that's the one where where we've taken Fletcher's course 201, which I helped him design for the Army, and then added 30 plus lessons that I've written for traders that are an application of all these ideas, but into trading specific scenarios. Because Creativity 202 is 30 lessons, 30 insights with short practical exercises for executives. And then 202 adds trading material and trading practical exercises to build on each of these lessons. And that's what makes this thing so special. That's the only course in the world where you can get Fletcher's creativity plus my work for traders combined that has the attention of the chairman of the Joint Chiefs of Staff. We think it's worth $30 billion a year of improved performance. That's how good this stuff is. So I thought you might get a kick out of looking at, behind the scenes at the highest levels of policy in the nation and what that looks like. Kind of fun. All right, let's take a look at what we got here for today. Thank you for indulging me. Yeah, Van notes WonderWorks. It's pretty good. Fletcher is That's one smart dude, man. I'll tell you what. He keeps me on my toes. I'll say that. He's fun to work with. All right. So yesterday we had a gap down and kind of a doji. Today we had a micro gap down and a slight push back to the upside. Now, yesterday we observed that if this price today had fallen below that 10-day low, that we would have an owl entry to the downside and that the downside trade would really be emphasized. But you notice that it actually held right at the edge of the cliff. It did not penetrate the 10-day low. We did not get the owl entry. You'll notice that the slope of the 30, which is this black line, did not roll over and get short. In fact, it just slightly increased to the upside. So you'll notice that that slope is faintly but positively up. And the dragon remained about flat. So we do not have the conditions for an owl entry, which means that I'm going to treat this as a 1, 2, and if it breaks out of this yellow zone, I'm going to treat that as a 1, 2, 3 entry to front run a Kata 2. The Kata 2 would either be the crossing of the RLXD right here at about 456 auto buy, or tomorrow the PSAR dot would be here, so you could auto buy it at about 460, or to front run it like I am prepared to do with a tactical trade. I'm going to have a tactical trade in this area, and then if it breaks above the dragon, I'm going to convert 20% of the position to a longer term swing trade, and another 20% if it gets above this one. And in that way, if it really breaks out and crosses the 30-day high, which happened here, it's also going to be crossing the fair value. And then Z2 is closely in play, followed by the Z3, and then the all-time high. So we are still 6.56% off the high down here to the price. So 6.56% from the all-time high, which is way back over here. And we have crawled way out of the hole. This was something like 13%. And we've crawled back up. And so now if this can hold right here, then I'm cautiously optimistic that this could end up being a Z2 or a Kata 2. It's a Kata 2 in the making, because you'll notice that right now, although the baby dragon has rolled over, the RL10 today rolled over and turned into the fall. So we're still in the fall. So this has to roll back to the upside and then cross the dragon. But I am prepared to take a 1, 2, 3 entry tomorrow, intraday for sure. And then if we got a couple days of recovery like that, then this RL10 will roll up, and then we'd end up seeing the Kata 2 probably forming somewhere around here. But I do note that today the PSAR flipped. So we've got to be mindful of the PSAR flip as an indicator that this was enough weakness in here to get us close to an owl. That's about the worst arrow you ever saw. So that is enough of a downward move for the PSAR to flip, which now means, now that we're looking at the other side of this trade, that any violation below here is instantly shorted, instantly. So this shows you that this yellow zone really is a zero state. that's ready for a tentative upward move, but is also a big move to the downside, where we're looking at it quickly crosses the Bollinger Band mean, the RL90, gets to the bottom of the river, and that's where I would add a second position here, because we're so close to the collapsing dragon over here that I want to have two positions in hand if that crosses. Because if this breaks at 418, Katie bar the door, I'm adding a third position here. So one position short, two here, and then three in this region. And that's what the downside looks like. And you can see that the short-term hull is pointing down, and the RL10 price extension in the fall is pointing down. So when you see such a strong possibility for moves in either direction, then you realize that this really is a perfect critical state that comes out of this yellow zone in here. I should probably draw that in blue. Yeah, so this is a perfect zero state and strong moves in either direction against a relatively small range. So that's like a $6, which is about 1.5% if you were to use the full daily range. So interesting times. Let me know in chat if you found that helpful. All right, so let's look at our six indexes. So today the S&P was the best performer, up 0.5. The diamonds were up 0.35. The Qs up 0.25. The Russell was down 0.32. Treasuries were off 0.75. They're now at 126.5. So that's breaking. And then emerging markets at minus 0.8. So a relatively tight range, but clear evidence of strength in the S&P and the large caps, more so than the techs. My brother asked, do we know what happened, what caused all the caused the big spike in all of Glenn's framed trades? A price spike? We'll take a look at it when we look at the frames today. All right, let's take a look at the few symbols that outperformed. Let's stay focused on the charts here, Bill. But don't be sorry, just noted. So XLY was slightly better. That's the S&P. S&P discretionary, consumer discretionary. Sorry. Materials, oil exploration, consumer discretionary, or consumer staples here. So staples are still better than discretionary. So the defensive plays are doing better. So that's not surprising when you see the S&P and the Dow both doing better than tech. So XLP is still short-term outperforming. Wheaton precious metals, the gold and precious metals proxy, energy up 1.3, marijuana 1.58. Best performers today in the targets. Devon Energy up 3.25. Tesla regained some of its mojo at 1.1. U.S. Steel 1%, Cliff 0.96, Microsoft, and those are the ones that were better today. All right, let's look at the sectors that underperformed. Blended commodities 0.34, Brazil 0.27, lumber 0.25, agriculture 0.23, S&P Tech and oil at basically flat. And now getting into true negative territory. The other lumber, finance, and Ethereum off fractions. Mexico 0.34, lithium and ARC Genomics 0.7, FANGs off 0.75, so really underperforming even the rest of tech. Biotech, Bitcoin futures, ARC Genomics, large cap blended crypto, clean energy off 1.2, seems to be stalling though. VIX, blockchain, Simon Property Group for commercial real estate 1.8. Moonshots 1.96. Bakkt Holdings, Global Futures of Finance 2.63. Even though Bakkt is a individual company, I'm treating it as a sector proxy for Bitcoin infrastructure. Robinhood was off 3.5, Squarespace 2.21. That's what's contributing to that global future of finance getting smoked at 2.6. Coinbase 0.39, Rivian off 0.3. So a lot of the disruptors basically and tech at risk. All right. I want to jump to the reports first, and then we'll come back and hit the traders. We'll go to dashboard number 1. We are still in sideways normal. So there's normal volatility and sideways price location. We got a little bit better today. It failed to fail, so that's always a good sign. ATR percentage has come back to 1.36. I mean, 2 weeks ago, that was up at 2.5. So it really has become much less volatile lately. You know, each day that there's not a thermonuclear war, I guess that's a good thing. Risk Z is still well above, the zero line and above Z2, but it is clearly rolling over and showing the decay of the goodness. I put it right at the that critical state though. The price action is showing large spectacular moves in both directions are feasible. So I'm taking that as the most important aspect of the market right now, is that very specific range compression and holding right at a thin margin of rolling over into the owl or rebounding with a very nice Kata 2 starting. Notice the winners in here: United Health, Procter & Gamble, Merck, Coke, and McDonald's. That's as consumer staples and healthcare as you can get. The losing positions: Boeing, Intel, Disney, Morgan, and Goldman Sachs. So finance, tech, and discretionary. Lots of auto framers to choose from. A couple 5DDs of interest. So we should have those framed. DuPont and Goldman Sachs. That's worth looking at, to look at what a 5DD and a 4-to-1 reward to risk ratio looks like for all you swing traders out there. Intel's at 3.7-to-1 and did not get smashed today. JP Morgan is 3.8 and did not get smashed today. By which I mean it was not one of the 3 or 4 worst performers. Those are the ones that are highlighted in red. Those were the biggest percent losers today. more than one standard deviation. All right. So the red highlights in this column are the ones that exceptionally large losses compared to their peer group, which is the Dow 30. And the green ones were exceptionally large gains against their peer group. So that's how we read that. That's what these little flashing red and green lights mean. So again, lots of auto framers in play, which is nice because if we get that upward move, there's two things that could fuel that. One is the exceptional leaders continue to lead, something like Tesla, or the ones that have pulled back the farthest that are not going to fail further. People want to buy them while they're on sales, and that's where you would see the auto framers. So which segment is going to lead the way north? I don't know. We'll see. The ETFs, even more symbols on an auto framer better than 2-to-1. And a lot of them had that 551W pattern. When you see that one, this is how you should visualize that. This is an important one. So the 551W means that it's 5 weeks positive. So if this was today's price action, let's just call it a doji. And if we went back 25 days or 5 weeks, then wherever it closed 25 days ago, this thing is higher. So that's a plus. It's higher than it was 25 days ago. That's what the first 5 means. Second 5 means that 5 days, it's below where it was 5 days ago. So if we went back 1, 2, 3, 4, 5 days ago, let's say that's where the close was. The close to close measurement of 5 days is down. So the longer term move was up, giving that longer or intermediate term momentum of strength, pushing it up, but a short term pullback in a longer term trend. So a slight pullback looks like strong and then a pullback. And then the 1 means that the 1-day performance was that the close was greater than the open. So it's a white candle, meaning that it opened here and closed there. So the net move of the day from open to close was up, meaning that they were willing to hold it at a higher price than it started. And so it was net positive momentum. So that's what the 1 means. And then finally, the W means that Williams percent R is greater than minus 50, meaning that if we looked at the last 10 days, and we said the highest high was a 0 and the lowest low of the last 10 days was minus 100, because that's how Williams percent R is computed. The midpoint is at minus 50, and that means that the price today, which was a white candle, which was higher than it was 25 days ago, but which had a slight pullback, that there's still at least half of the 10-day range available to the upside. So the move from a mechanical entry to the upside divided by the range gives us the reward to risk. So I can come over to any of these that have a 5-5W and I can say, oh, here's a 5-5W and it has a 2.3 to 1 in EFA. I like that. I like that better than in the Dow, which has a 551W, but which doesn't have better than 2 to 1. Okay. And here's one in Latin America, has a 2.1 and a 551W. So now I'm just scrolling through here real quick. Here's one that's technology, EA 2.5 to 1, and consumer discretionary 2.4 to 1. So those are all symbols that I am now interested in because they give me a favorable pattern. I'm buying the next day's momentum, and it gives me a favorable reward to risk on the basis of trade location. So I want both of those things stacked up in my favor. I'm really interested in Latin America because when I read over here, I see, oh, this thing was one of the strongest performers over the last 1 month and 3 months. So if it could resume its move up, there will be a lot of other people that will see this as a buy on dip opportunity and want to buy strength. So Latin America could really work well, could really work. So that's a quick look at 551W for you swing traders out there. Let's see, that was ETFs. Yep. Okay. In the auto framer, again, I'm looking at I'm always interested in things that are better than 2 to 1. I'm looking at the minimum ATR risk is a quarter, the maximum ATR risk is 1, and then the risk in the middle is range risk plus 10 cents. So what's highlighted is the amount of risk that's in between. It's the middle value, and then that's the number that gets reported over here into my risk. So in this case for Goldman Sachs, the range risk was 7.73, but the 1 ATR was only 7. So it chooses the middle value between those three. It's never going to be a quarter ATR unless the range risk was so narrow that this now becomes an issue. So it turns out that a quarter of an ATR is also an interesting candidate for, here, wait for it, the MMRB. That's a potential, a quarter of an ATR intraday is actually an interesting amount of price. Now it's bigger than some of the other ones we'll see. So just remember that the quarter of an ATR in Tesla is $12.50. A full ATR is almost $50. So a $50 intraday move in Tesla is you're not even allowed to call that abnormal because that's just one average true range. Of course, it's at $1,100, so that's why. So all of these are testing out better than 2 to 1 on tests of their 10-day high. And I look from the top down on these because these are all ones that if the 10-day high was up here for my target and today's range was like that, I'm taking the range risk, generally speaking, and say, how many of those are available to the upside? This would give you a 4 to 1 kind of a frame where if you were using the range risk and you saw 4 to 1 like you do in treasuries, That's how far it is back to the 10-day high, because it has sold off that much. Well, that makes these that makes all of these critical states, because if it breaks out to the upside, it's a big move, but it's already sold off so much that further sell-off would not be surprising. And since it's already fallen this far, it could fall that far on the second leg. That would be the second leg down. So everything that's in this highlighted area, especially those that are up here at 4-1, become perfect critical states. And you could use the minimum ATR to begin sizing the intraday MMRB. And you could use the 1 ATR as a possible swing trade stop. And notice that your intraday position would be 4 times the size if you followed that logic, because one's a quarter of an ATR and the other one is a full ATR. When you see this many symbols with the max ATR, what that means is today was a large range day. And so the range risk tended to be bigger. All right, drive it on. I want to get to the my monitor's flickering. I want to get to the charts of the day. I want to start with Glenn's trade frames for tomorrow first, because that's connected to the for the tomorrow setup. So for people that just want to get that, they can. So he's got a critical state on the weekly and on the daily. Look how tight that is. Now he's identified his second and third positions, as we asked him to, that are geared towards the daily breakout. So the breaking of the PSAR. Yep. So those are all his breakouts to the upside and the downside. We've seen enough of his work that we know that that's going to be a great critical state move in either direction. And it's really at the bottom of that weekly trade. So this collapse would really be large, but there's enough measured moves to the upside that it could climb that ladder. This is in electronic arts, I should have said. So interesting one. I'm having Danny and my son take a look at what I'm calling the triple squeeze. And we're going to make this a TC 2000 trade frame. My logic is going to be this. I'm interested in symbols. Man, this thing is really driving me nuts here. Let me reboot my monitor real quick. All right, we back with the monitor. Man, it's still messing up. All right, so the triple squeeze idea. Thought you might be interested in this. I'm gonna have to unplug that. That's getting a flicker on that. I don't know why that's the case. so I got to use the smaller monitor. Right, so the idea behind a triple squeeze is I'm going to look back 50 weeks, and I'm going to set the highest high equal to 100 and the lowest low equal to 0. And I want to find things that are in like between, right in the middle, between 45 and 55 on a 100-point scale. And I want the last week to be exceptionally compressed, so that almost like an acorn on the weekly, it could explode in either direction without surprise. And then I'm going to do the same thing with the daily. I want to go back 100 days, set the highest high to 100, lowest low to 0. And I want to try to find things that are in this 45 to 50 middle 10% range that are also very tightly compressed. And the logic being it could break out sharply in either direction. And then I'm going to do the same thing on the hourly. Now, I'm also interested in the same setup to find things that are in the top 10% and the bottom 10%, because my logic will be, if it's already at an extreme, it's either going to break out or break down. And if it's in the tops of these, it could break out or break down. So this same kind of mathematical treatment is going to give me this triple squeeze in the middle. And I got to come up with a name for the ones that are at the extremes. And then there's combinations of these things. Like I'd love to have something that was in the middle on the weekly, but now at an extreme on the daily. So this is going to become an entirely new strategy based off the idea of the triple squeeze play. And I just got to come up with a savvy name for the ones that are at the extreme. So you can look forward to those things in the near future. And the reason that's really important is because when you look at Glenn's, you're going to realize that all of his weekly, daily, and hourlies are all either at an extreme and tightly compressed, or they're like right in the middle. This is one that's not in the middle. So these are ones that are already at the extreme sell-offs in all the time frames. So this is something that is either going to rebound sharply, which would then start this move and this move, or this is going to break down, which is going to trigger that to break down, which triggers that to break down out of the previous. This might even be called the borderline. You know, at the border of breakdowns or breakouts. So yeah, I think I'm liking borderline. That's what Glenn does with that critical state swing trading. Yeah, his trade frames from yesterday netted my brother $5. We'll see that in a minute. So I just want to give you a heads up of what's coming. I'd like to get it documented so that we can point back to the day when it got started. All right, so that was Electronic Arts. Next one is Visa. And you'll be able to see very tight compression, and tight compression. So here's one that's right in the middle of those weekly moves on the weekly, right in the middle on the daily, and at an extreme sell-off on the hourly. So the hourly could easily go this way, which triggers that move, or the hourly could break down completely, which triggers that move. And then the move that starts on the daily is also triggering a middle range breakout on the weekly. So this one is interesting from a critical state for a slightly different pattern, but the same underlying concept that you want to find things compressed into critical states, small volatility, but also in a position where they can make large moves in either direction without controversy, if I can say it that way. So that's what makes the critical state swing trader, CSST, the Glenn Osborne special. I hope he likes the liberties I'm taking with his ideas. This one is Pfizer. Now, Pfizer is going to show us the same idea, but now we have a squeeze up here. And if we take a look at this, we say this is in the upper third, so it's already pushing the upside. The daily is right in the middle with a tight squeeze. So there's an equally large move in either direction. But the hourly is at the all-time upper extreme of the look back period. So again, critical states, and each of the time frames is in a critical state, but in a different reason. So again, if we think about this on a scale of 0 to 100, you can be in a critical state when you're tightly compressed right in the middle, ready for a breakout, or at any one of the at either of the extremes, ready to rebound back to the middle or continue the breakout beyond the previous range. That is such a nice, I may even get that as a tattoo. That's a really nice way to draw that. So hopefully you guys are seeing that. This is another niche trade. So now we'll see Penn at the very bottom end with his tight squeeze, at the very bottom end of that tight squeeze. It's like in the bottom 1%, and the hourly at the bottom of its long squeeze. So here is a triple down ready to break out in either direction. Nice. All the names you got to come up with. CSST, critical state swing trading. Boy, do I like that. Here's one in win. And we're going to see this as a continuation play because this one paid off large today. Near the bottom. Also kind of near the bottom on the daily, from the top to the bottom, it's critical state here. And then this sell-off followed by a rebound was awesome today for my brother. And it closes right in a nice, after like a hook. And so this could resume, or this could come down, test the collapsing dragon and break down. So that looks good. Liking that one. Glenn's given me so many ideas here today. I'm trying to race through these in time. Here's one that's right in the middle of his critical state on the weekly. Nice tight compression right in the middle. So conceptually, you should think of this thing as a zero state, ready to break down or break up. This move has generally been up and pulled back just enough. It's almost in the middle. I mean, there's a good strong move in either direction again. Yeah, I would say this is back in the middle. But the upward bias really makes me want to believe in the upside move. And it's had two legs down today or lately to here, second leg down, first leg back, and it's above the PSAR. So it's easy to believe in this thing getting back to 64. So you have a tight risk, and then you have 1, 2, 3, 4 to the upside just to recover fair value. That's nice. And remember, that's just a move up to this price level here. This move is that move expressed on a lower time frame. So nice work. Let's see. More trade frames. This one is Simon Property Group. It's at the bottom of its weekly, ready for a nice rebound move up, ready for a collapsing move down on the weekly. The daily is clearly at the bottom of its large, massive sell-off. So it's ready from this zero state to move sharp or break down completely. That's the one I want to see, the big downward move. And that all that would take is for this thing to just roll over, breaks through the dragon, breaks through the RL10. That would be a massive CD to the downside, or just a standard SSC from here and recovering back to the previous fair value around 133. So that's a nice one, ready to go in either direction. Last one. Let's keep that in blue. Yeah, really tight risk box. Ready for the recovery, but really ready for the collapse in treasuries. So if this bottom holds, this has room to 130, 132, 135. But the collapse here, woof, boy, will that get people's attention. All of the does this look at all like the risk-free rate of return in treasuries? It does not. It looks like a growth stock that's in free fall. All right, let's get to the trades of the day now. Here's Glenn trading his own trade frames from yesterday. So this was yesterday's close and today's open. He gains 0.1 R. We got to do better capturing this favorable excursion. Was probably 0.6 maximum favorable excursion, and we gave a lot of that back, but he recovers, gets the nice SSC stop. He stays with the downward play, and when it breaks down below a CD, he gets that one for 0.3, so a total of 1 R on Dow Chemical today. In Penn, gets the first scratch, gets the second collapsing dragon, and the third collapsing dragon for 0.75. Very measured moves, one shot at a time. Stays with the direction of the trend as shaped by the declining VWAP and the unbroken chain of breadcrumbs on the PSAR, all out of a Z3 pinch and the start of the day down. Just nice work. Unhurried, deliberate. Win for 1.3. There's the open. MMRB move off the top. Routine entry. Routine exit 1.3. That's about 3R for the day. How much do you want? My brother has this marked up. So these were This was just today's trade for my brother with his visual sniper style and the sniper setup that we have been developing in here. So he gets 50 trades today. His best win was 4. His worst loss was minus 1.34. So we got to do better on that. Nothing worse than 1. So tighten that up. 42% win rate, 58% loss rate. So that's about a 3-2 on the win rate. And then 3-1 on the average win to the average loss. So this is, when you multiply that out, that is 6/3, or a 2-1 payoff. And that means you should keep slinging as long as you're hitting like that. That's the one we got to fix. And that's the equity curve for the day. Do you want that today? And stabilizing around 0.5 expectancy. That's good stuff. So we're just going to notice his I wanted to say the word parsimonious, his minimalist approach, minimalist visual display. So he's only got the absolute necessary on there, and that is the RL10, which is this blue, the baby dragon, which is a 3-period moving average on that. He's got the spine of the dragon as the RL10, and he's got the all-important PSAR. So that allows him to screen out the excess noise, and he's using thin marked bars. So he's got, he was trying using a stop. I'm not sure what that was. I don't know. You should have been out by here instead of here. So what I want you to do, brother, is put boxes around these charts so we can see where these things are working. He tried a recovery move and bought it here and stuck around too long, minus 0.68, minus 0.95, stopped in reverse here, a 1-2 exit when it crosses the spine of the dragon. That's good practice. Instead of waiting for this, he just captures that, and that one pays for those two already. Missed this one. Should have been hitting it here, because that is Kata 2 all day. And then this is a collapsing dragon. So both of those should have been hit instead of this one, which pays off for 0.58. Good PSAR reversal, because it now crosses the dragon here anyway. So this is sort of you got to get in not later than that. I know you're waiting for this crossover, but if it hits the PSAR, hit it, use that as the stop. First position, second position, third position was reasonable, stopped quickly, stopped out. So that's 5.5. So that's plus 4.5 just on that series. Oops, just on that series. So that's pretty good work. This was simulated trading. Tim was not at his desk, so he did the bar by bar on this one. So let's try to zoom in a little bit for him, see what we got here. Okay, first position short. Where's his cover? Oh, there's, so he gets micro pay, tries the collapsing dragon again, stop and reverse, gets paid nicely, re-entry, good scratch, sharp reversal against him, avoids that, so that's good. Stop and reverse again, now down to here, gets paid, good scratch, gets paid, good scratch, re-enters, gets paid on a double scoop. So this is all pretty good stuff. This is good use of the game film. He's not including in his live trade log because he wants to differentiate between bar by bar sim trading and this. Now, what I want Tim to do is to keep a separate trade log for just the bar by bar simulations. And then what I want you to do is to compare the two data sets. So live trading with small shares or paper trading forward versus simulated bar by bar. So we can see what the net difference in your attitude is when you are trading it live forward versus bar by bar on the sim to see if there's any psychological state difference for you. How to avoid too many stop reversals. Remember, if you have strict rules and you are getting positive scores, that's not an issue. This is price dictating when your rules fire. So if you're getting a lot of stop and reversals and positive expectancy, that's just what the market is giving you. That's not a bad thing until it goes negative expectancy. How to be more calm and trade less? Trading less means you got to change your rules. So I'm not convinced you want that, or that's a good thing as long as you're getting positive scores. More calm is about the zero state, and you got to desensitize to the importance of any one particular trade, and you got to become more disinterested and de-emotionalized. It's just one more brick, and that just comes through repetition, practice, getting in the weight room, lots of reps. Let's see, where was trying to find Tim's stuff. Okay. All right, back to Wojcik. And this is our WMB3 field test. So let's see, where's my, so overbought, or I'm sorry, oversold, uptick, buys this, that is correct, good exit. There's the COTA 2 instant universal re-entry, should have gotten paid here, you should be getting paid there. Here's this one. If we, I'm not sure why we didn't buy that one. If you use this, you might not have even gotten out of that and gotten paid on all of that. But we'll assume that you exited, and then you should get a COTA 2 right here and get paid. This one oversold, uptick. We should be buying that and cashing here. Upticks. Nope, nope. Oversold. Here's an uptick. We probably should be buying this with a stop here and getting paid there. This one's clear and obvious. Breakout. Getting paid. Breakout. Great exit. Finally, we got one. Yay. We should have been better in one point. I think we probably missed this one and that one, but still positive expectancy. Um, let's see here. Get my brother's stuff on this. So this series is plus 11. Good scratch, good stop and reversal here on the Pfizer flip and across the dragon. Got paid, good reversal, good scratch, good shot. Should be a stop and reverse, and then a second position and a third position and a fourth position. This was 11, but it could have been 15. Home Depot, the trader's symbol of choice these days. Nice work. Looking forward to your course. So are the people. See, this is where I need you to put those boxes around it so that it leaps out, so I don't have to imagine what you're doing and thinking. It's already painful enough to spend time in your head. I'm kidding, brother. So -1, minus 0.8, minus 0.5. So I can't see what this is. I mean, I don't see what, if this is long, or if that was a scratch. So we don't know what you're doing here. I'm going to assume that was a loss, or you went long and then covered. This one will make up for a lot of sadness. Here's 3. These 2 paid off. These 2 probably just canceled off. You're getting your third position in too fast and getting sloppy because you've already had the easy run. Now, when it starts to reverse, you're taking the maximum loss on the minimum play. I would just say get rid of the third position because those are general. Every one of them has been a loss. And then we should be out here, not down here. Not good. Fix that. Don't behave in a way that induces sloppiness in others. Be a good person. Luke, you just trade your way, bud. You're doing fine. 15R for the day. What am I going to tell you how to suck eggs? All right. Gets paid. Gets paid. This looks like a micro loss. Gets paid. Gets paid. Probably asleep. Micro loss. Got paid. Got paid. Pretty good stuff, buddy. I don't see much wrong in there. Let's zoom in a little bit here. Gets paid. This one probably should have been a scratch, but still, that's not too bad. Yes, I ask myself the same question all the time. Where was I? And then where was I? And then where was I? Oh, just in time. Just in time. So it doesn't always go in your favor. We sometimes need that little wake-up call. It's at minus 0.6. Yeah. So with best practice, with your standard plays, the combination of this move and or under ordinary circumstances, you would be getting that one. That's manageable. And then I'm just wondering where this one was. So there were 3 big questions today. Where were we? No, that looks like, oh, I'm sorry, that's 0.6. Okay, that's still good. My brother, let's see here. Nice collapse routine. Should have been short here and covered here and gotten paid. Good scratch, micro pay, micro loss. All told, he pulls 5R out of the market from Glenn's setups. That's not a bad day at work. All right, that's everything we got for today. Sorry about the monitor trouble. I'm not sure whether. Probably got a loose wire in here somewhere. So that's everything we got. Get this published and posted, and keep marching, fellas.